here. So we're going to be talking this afternoon, depending where you are, about the big beautiful bill and the fact that it is now it's provided for certain tax relief for overtime payments for your employees. And we're going to dive into the details and by the end of our time together, my goal is that you're going to have a good understanding of what these requirements look like, what you should be thinking about doing in response, and maybe equally important, gaining an understanding of what this big, beautiful bill tax relief does not mean. Because I can tell you there's a fair amount of misinformation out there, and I'm hoping that I'll be able to dispel some of that. So that being said, off we go here. Let me advance my slide. And Tony, can I get you to confirm one more time you're able to see my overview slide?
Yeah, Brian, we do.
Okay, very good. So overview, the One Big Beautiful Bill Act, and I'm just going to refer to it more in short form as either the law or the beautiful bill. It gives certain income tax deductions for employees, and that's a critical distinction, for overtime payments driven by federal labor law or the Fair Labor Standards Act. And I'm going to dive into more detail as to what some of those distinctions are all about. But right from the get-go, I want you to understand that this is something that it's an employee tax deduction, not an employer deduction. Secondly, and the key for you folks is that it relates to overtime payments that are based upon federal law, not state law, not union contracts, not premium payments that are associated with union contracts. So it's a very discrete basis upon which an employee can seek certain tax deductions, and we'll go into that. So what this means, and I've got highlighted on this slide, is that this law, the beautiful bill on overtime, it's going to have a direct impact on your hourly employees who earn overtime. It's going to have an indirect impact on you as employers. And what I mean by indirect is that, again, you're not going to have tax relief associated with this law, but you are going to have certain reporting requirements as it relates to your employees. And that's what's really important for you to understand. And so as a result of all of this, you're going to need to take some steps to either ensure your payroll systems have the ability to track these qualifying overtime payments in accordance with the law, or you're going to need to look at modifying your payroll systems so that it is able to track these overtime payments that are subject to the law. So moving on then to the kind of the myths, what I would call. There's, again, a lot of misinformation out there about what the Big Beautiful Act does. And importantly, the law does not enable you as a business to deduct overtime payments as a business expense. That's a question that I'm getting with some frequency, and that's a myth. Another myth is that the law allows a business to avoid making overtime payments altogether. That is just simply not the case. This has nothing to do with an employer's obligation to pay overtime in accordance with federal law. Lastly, another myth that I'm hearing with some frequency is that this law somehow impacts businesses' payroll tax withholdings. That is also a myth. That is just simply not the case. What we're talking about here is that your employees are going to be able to deduct from a tax perspective on their personal tax returns a certain amount of overtime that they're receiving. And again, I'm going to get into more detail as to what that really means. So if we focus on what the law does in reality, here's where the rubber hits the road. Employees have the ability to deduct the half-time premium portion of the Fair Labor Standards Act overtime from their federal income tax. And when I'm talking about the half-time premium portion, as you know, when someone's entitled to overtime under federal law, the rate is 1.5 times their regular rate. And so what this law is focusing on is just that half-time premium that's associated with the law. So importantly, this is not a situation where employees have the ability to deduct 100% of the overtime they receive, but rather just that half-time amount that's provided for under federal law that's really functioning as the premium. The one thing, and again, this is an important takeaway from you folks right out of the gate, is that overtime that you may owe as a result of your collective bargaining agreements, or even, frankly, under company policy, state law, some other requirement, does not qualify for this tax deduction. So all we're talking about with regard to this deduction is that half-time premium that's mandated by federal law. To the extent you have something in your union contract that says otherwise, that is not going to be subject to the deduction. And that's why it's going to be really important to be able to kind of dissect or segregate federal overtime from various other forms of overtime that you pay your employees. And again, I'll get into some details in just a few moments to illustrate some of these points, but that's really kind of the big crux of this. Another reality, yeah, go ahead.
Brian, I just want to interrupt real quick because I know there'll be questions about what happens with the 2 times overtime on a Sunday application when it's instead of time and a half, it's a 2 times the rate if they're already hitting overtime through the week.
Yeah, that's a good question, Tony. And so that's a great example of a requirement that's flowing from a union contract to give somebody additional overtime or an additional premium by working, say, on a Sunday. That kind of overtime, and I'll use air quotes, or that kind of premium is not going to be subject to this tax deduction because in that instance, it's driven by a labor contract and not federal law. There's no requirement under federal law that somebody be paid 2 times their amount of pay for working on a Saturday, a Sunday, or a holiday, or some iteration like that. So good point of clarification, Tony. Thank you. The last point I'll raise here is that with regard to reality is that again, federal payroll taxes, Social Security, Medicare, FICA, none of those things are going to change as a result of this law. So this law is not implicating, modifying, changing any of your obligations from a withholding standpoint in payroll taxes. And that's also an important feature and something that I'm hearing a lot about that people are confused about. All right, we're gonna kind of dive into some of these differences here. And Tony, this again, your timing was perfect because it's a good segue to really the distinction between federally required overtime and overtime that can result from a union contract or other circumstances. And so the threshold issue here is that, again, federal overtime or FLSA overtime is the product of federal law. It's a legal requirement. And really breaking it down into its basics, employees are entitled to overtime at 1.5 times their regular rate, and there's a legal concept associated with that, for hours that they work in excess of 40 in a work week. And the federal law, the Fair Labor Standards Act, measures the overtime requirement on a week by week by week basis. It is not tied to your pay periods, but rather it focuses on a work week. So to the extent that an employee works more than 40 hours in a particular work week, any of those hours beyond 40 are paid at this premium of 1.5 times their regular rate. And as I mentioned just a few minutes ago, this new law that provides the tax deduction is only focusing on that 0.5 portion of that overtime rate, not the whole thing. That's another common misunderstanding of the law. And so, and again, where some people get tripped up on some of these requirements is that they say, well, wait a minute, I pay my employees every 2 weeks. So shouldn't I be tracking and worrying about overtime on a 2-week basis? And the short answer is no. Federal law requires you to be looking at work week by work week by work week when it comes to the analysis of what's owed under federal law. So let's shift gears and talk about contractual overtime and other premium payments. These are payments that are driven by your collective bargaining agreement. And it could be, for example, that employees are entitled to quote unquote overtime if they work more than 8 hours in a day, 10 hours in a day, 12 hours in a day. There's all kinds of different iterations of what that looks like. Some contracts provide that employees who work more than 32 or 36 hours in a week are entitled to certain premium payments in the form of overtime. Tony, you brought up the example of double time. It's very, very common for contracts, labor agreements, to provide for double time payments on weekends or holidays, or if they work, 6 consecutive days in a row. Those are all things that are driven by contract. And importantly, none of those premium payments driven by a contract are subject to this deduction. And that's where we go kind of back to the beginning. And that's why it's going to be so important for you to have the ability to differentiate and distinguish between overtime that's required by federal law and overtime that's required for some other reason, whether that's a union contract. There might be state law requirements in your state that mandate overtime at certain points and sequences. That doesn't count either. So again, all we're focusing on is that federal law.
So Brian, just to be clear, because there's already a question that's been posted on this. So in the scenario that somebody works and meets the federal requirements of 40 hours in a work week, but then in this scenario that they work a day, typically Sunday, but they work a day that's double time over the 40 hours and it meets the federal requirements, they are only able to deduct 1/2 of that overtime. And then, so technically in that, if I'm saying this right, 1.5 times is not deductible and half is. Does that make sense?
Yeah. I think I understood that. And I'll kind of play off of that example. So we'll take the hypothetical that an employee, and I'm just making this up, an employee works Monday through Friday. They work 8 hours a day. And so as a result, by the time they hit Friday, they're at 40 hours in the work week. This particular employee has an obligation to work on Saturday. And under the union contract, that person is entitled to double time, let's just say. And this is an example where sometimes the requirements of federal law will overlap with the requirements in a contract to some extent. And so in that example, the employee works on Saturday, they work 8 hours, they're only going to be able to claim the deduction for the 0.5 premium for all 8 of those hours. To the extent that they're entitled to additional premiums under the contract, those are not going to count. So again, we get back to the point, as I probably said 4 times now, you're going to have the ability to dissect and keep straight the different types of overtime that people are receiving so that you can accurately report this information to employees so that they can claim the deduction.
Okay, perfect. And then one thing, maybe you're gonna get to this, Brian. We've had questions on to what defines a work week. We have contractors that play, Tuesday to Tuesday through to Monday, or they say Tuesday to Tuesday, Wednesday to Wednesday. What defines a work week for doing that overtime for the federal law?
Yeah, so the law allows employers to establish a work week. In other words, it doesn't have to be, Monday to Sunday. It can be it can take other forms so long as you're not, and I don't mean this the way it sounds, playing fast and loose. In other words, once you establish your work week, it needs to remain the same, and you need to apply it consistently.
All right, awesome. Sorry to interrupt, but as questions come in, I'll.
No, I appreciate it,
Well,
Tony, because I don't have a snappy ability to look at the chat. So if you can just keep
Yep,
feeding me questions like that, I appreciate it.
you bet.
All right. Okay. So here's again, just a pretty quick example of how this would work. Again, I just came up with a hypothetical that you have a union contract that requires an employer to pay overtime 1.5 times if employee works more than 10 hours in a day. And in this particular example, the hours in question do not exceed 40 in a work week. And so in this example, the overtime premium that's required by the contract is not going to be subject to the deduction. If we change the facts, and this was a situation where the employee had already hit 40 hours in a work week, well, then we've got a different set of circumstances on our hands. But again, under this example, this 0.5 premium is not going to be subject to the deduction. Okay. All right. So I'm going to shift gears. I'm going to talk a little bit about kind of the what I would call the employee side nuts and bolts of this deduction. And with the caveat that, again, you as an employer are not going to be seeking this deduction on behalf of employees. You're not going to be filing tax returns on behalf of employees. But I think it's important for you to understand some of the basics around how employees are eligible for this exception, or this deduction rather, so that you can respond to questions and help further your understanding. So issue number one, effective date. This law retroactively goes into effect 1/1/25, even though it was enacted on July 4th of 2025. And so, this law is, I'll call it, alive and well as we currently sit here. And one question that you may have on your minds is, well, wait a minute. If this is retroactive to July 1, 2025, and you, Brian, are telling me that I have to dissect and differentiate various forms of overtime, how the heck am I going to do that going back to 1/1/25 if my systems have not done that, or I haven't set up my systems to do that? And the short answer, and it goes beyond the scope of our conversation, is that the law allows for certain estimates of overtime that may qualify during this first partial year. Once we hit 1/1/26, well, hopefully you'll have everything in place. It should be, set up and operational and hopefully streamlined. But for this first year, just understand that there is a method by which you can estimate the overtime at issue to the extent that your systems are don't have the ability, or you don't have easy way of tracking it right now. Next, who qualifies? Generally speaking, we're talking about non-exempt hourly employees. There is some additional bells and whistles that talk about, people that make less than 35,568 annually, but generally it's understood as people who work on an hourly basis and therefore are entitled to overtime in the first place. So what that means by default is that your exempt salaried employees are not going to have eligibility for this tax deduction for the simple reason that they're not entitled to overtime. The deduction at issue, and this gets into some detailed tax related concepts, is that it's considered an above the line deduction. And really what that means in practical terms is that if this deduction applies to an employee, they basically, they take their gross earnings and they apply this deduction before beginning the calculation to determine how much tax they may owe. So this is really kind of consider it a super deduction in the sense that it applies to that gross income amount before their taxes are really even functionally calculated. So it's a really, frankly, a very nice benefit for your employees, and it will certainly give people some nice tax relief. There are some deduction limits that are associated with the law. It's up to $12,500 per individual. And to the extent that they're married filing jointly, there's a $25,000 deduction limit. So that's kind of the maximum amount that your employees can enjoy. One other thing to understand is that there's this concept called a phase out. And really what this is driving at is that when Congress passed this law, they wanted it to benefit individuals who earn, frankly, a certain amount of money. And so what the law says is that to the extent that you're an individual, we're going to begin phasing out this deduction once you hit $150,000 in what's called modified adjusted gross income. And so really what that means practically is that $12,500 deduction available for an individual. If I'm a person who makes, say, $160,000, $170,000, $180,000 in a year, that deduction is going to start to shrink. It doesn't go away altogether, but it starts to shrink. And I'll give you an example here of how that looks. So I just took a really simple example. And again, this is illustrating this phase out concept. And so we have an employee, they're a single filer, they earn $160,000 in modified adjusted gross income. The excess over this $150,000 threshold is, of course, $10,000. We take 10% of the $10,000, which is $1,000, which means their deduction is going to be reduced by $1,000. So doing the quick math, if someone was originally eligible for $12,500, now they're only eligible for an $11,500 deduction. And this calculation plays out depending on how much somebody is over that $150,000 threshold, to the point where someone could be disqualified because they make too much money. So again, I realize I'm going through this kind of quickly, but again, understand that there is a phase out. That's really something that, is going to be applicable to your employees, who are the ones who are going to be filing for this deduction. All right.
Brian, got another
Yeah.
question here.
Yeah.
Actually pretty interesting. Does the limit, the limit says at 25,000 when you are married if one spouse, basically it's asking what happens if one spouse is hourly and the other one's salary? How is that calculated when it comes to this?
Yeah, that's I'm going to pause for a minute and think about
And
that.
I guess I would add on that, and is it the responsibility now of the contractor to actually find out if their spouse is getting paid hourly or salary or they don't have to track any of that stuff?
Yeah, so I think that's really the biggest takeaway. And I don't mean to sound like flippant or insensitive, but whatever's going on with a spouse, let's just say, whether they're salaried, whether they're hourly, none of that really matters to you as a contractor, because this phase out that we're talking about is really something that is the responsibility of the employee, and it's going to affect his or her ability to file for this deduction. I'm not saying it's completely irrelevant, because you may get questions about it, but if you get a question about it, I think you're going to have to politely say, this is really not something that we track. It's not something we monitor. And whether you, employee, qualify for this deduction, it's really going to be, up to you to pursue when you file for your personal income taxes. And again, I realize this sounds a little insensitive, but it may be the case that an employee is going to have to seek some kind of tax advice, or find additional resources. And that's where I think you, the employer, can swoop in and maybe have available links, information, resources that you can share with employees. But I really do want to be clear that from an employer perspective, you don't want to dip your toes too far into the waters of giving actual or implied tax advice. That's just something you want to stay away from.
Okay, thanks, Brian.
Okay. All right. Let's shift gears again. What do employers need to do? And this is, again, I would call kind of the rubber hits the road part of it. For as much as you may prefer to not want to deal with it, we've got too much going on right now. This is not, if this is something that my employees have to pursue, I'm just not going to worry about it. No, it's not so fast. And actually, let me move back up for a minute. Hang on a minute. This is the slide I meant to be on. Number one, you have compliance obligations under the law. There is zero doubt that the law imposes an affirmative obligation upon employers to track and report this qualified overtime to employees. So that's issue number one. You've got to comply with the federal law. It's not optional. I think as a practical matter, though, if you don't take seriously, not saying you wouldn't, these obligations, I do think that you're kind of asking for trouble with the labor union. I think the union is going to say, hey, you employer have these obligations, and you're not fulfilling these obligations, and as a result, your conduct or your failure to do what you're supposed to do is impacting our members in a negative way. So that's a problem for us. I also think that if you don't handle this appropriately, you're going to have disgruntled employees. You're going to have employees that may say, you employer have these obligations to accurately track and report my overtime. And oh, by the way, I definitely want to take advantage of these overtime deductions that are available to me. And how dare you not put me in a position to be able to take advantage of them. So I think that's an issue. I also, and maybe this is getting a little attenuated, but I also think that if you have a major problem, I'll call it a compliance problem, I could foresee a circumstance upon which you could be at risk of an IRS audit. Again, you have certain reporting obligations under this law, and to the extent a labor union or a group of employees or an employee makes a complaint to the IRS, they may come sniffing around and pursue an audit. And unfortunately, I've had clients that have been subjected to an IRS audit on one particular issue, and lo and behold, it expands to 6 other issues. So that's just something that you certainly don't want to deal with and want to avoid if you can. All right, now I'm back to the slide that I kind of skipped to. So in terms of next steps, I can't underscore enough the importance of getting moving. You need to put together an implementation plan. And I'm speculating, but I really think that it would be a combination of your HR folks, your payroll people, and potentially your accounting people as well, because this really kind of touches on maybe multiple aspects that I generally see would be applicable to HR, payroll, and accounting. So you want to put a team together, or somebody or somebodies who are going to be responsible for implementing a plan. One of the most important things that you're going to need to look at first is updating your payroll systems, if they're not already updated, to make sure that it has the ability to capture and to differentiate these different types of overtime that we're talking about. And what I would anticipate seeing is that your payroll system, and this is presumably going to come through coding or, the method by which certain overtime payments are entered into the system. But how this could translate to an employee's like pay stub, for example, is that you could see a line item for FLSA overtime, and there'll be a certain amount, a certain dollar amount. Then you may see a separate line item for overtime required by contract or overtime required by state law. But you get where I'm going here is that I think ultimately your system is going to have to capture the different types of overtime. It's going to have to be reported out. I imagine that's going to appear on people's pay stubs, but at the very end of the day, you're going to have the obligation to report this so-called qualified overtime on an employee's W-2 statement at the end of the year. And this is a question that's coming up more and more. Well, Brian, what do those reporting obligations look like from a W-2 perspective? And the short answer is we don't quite know. We know that the IRS is going to be coming out with information as to how the W-2 reporting requirements are going to change. I'm not aware of those guidelines being published yet. So it's something that you're just going to have to keep on your radar to be watching for as we get closer and closer and closer to the point in time when you do have to do that W-2 reporting. So we've got a little runway here, but understand that there should be some guidance coming out from the IRS on that. The next component is to make sure that you're training your payroll staff and HR. The information that I've shared here today, hopefully it's made sense to you, but admittedly, it can get a little convoluted. So I think that it will be very important for you to make sure that you have some internal subject matter experts who understand the basic requirements of the law and can make sure that you're implementing the right systems to satisfy those obligations under the law and ultimately to your employees. I also think that it's going to be important that you have a dialogue with your union representatives. I would be very surprised if you don't start hearing some rumblings from the unions about, hey, employer, what are you doing about this? What are your plans about this? Can you assure us that you're taking the right steps to make sure you're capturing this qualified overtime that's subject to the deduction? So again, just be prepared that if not already, you're going to start hearing from unions about what you're doing to comply. I also think as part of that, you're going to need to be prepared to dispel what I've characterized as misinformation. As I said from the beginning, there's a whole lot of just kind of general misunderstanding about what this law does, who it applies to, and a prevailing piece of the misinformation is that this deduction is something that the employer is going to take care of on behalf of the employee. That's just simply false. This is 100% an employee personal income tax reporting exercise. You're going to supply the information so that somebody can take advantage of the deduction through their personal tax returns. But this is not a circumstance where you're filing returns on behalf of employees or giving them tax advice. But again, back to the union piece, be prepared for questions. It goes without saying, and I won't repeat it, you do have the obligations to report accurate information, and that's really going to come where the rubber hits the road. There is when it comes time to report the W-2 income. That's when you're going to need to be able to separate out this qualified overtime. Another important piece, I think, if you want to try to get ahead of the curve, which I think is super important, informing your employees about what's happening and what's coming down the pike. I know FCA sent out a template that you might consider using to communicate to your employees, and that was sent on August 7th via email, I believe. Tony can correct me, but that's a
That's-
really good, good tool that's been prepared for you by FCA. Obviously, you can modify it if you wish, but it's a really good way to communicate to your employees. And I think it's really well done and well thought out. Lastly, be prepared to answer questions. And this really falls into the bucket on the employee side. I think if you do send out that communication that I just referenced, undoubtedly you're going to get questions from employees. What am I supposed to do? What are you going to do for me? How does this all work? And again, I think you're going to have one or more, management staff who are going to be prepared to answer questions, provide some resources, point employees in the right direction. But one thing that I have highlighted here is that it's going to be really important for you to set expectations that this deduction that we're talking about is a personal income tax filing obligation, and it's not something the employer has an obligation to do, nor will it do it. Again, we just don't want employees to be operating from the erroneous assumption that this is just something the employer is going to take care of for them, because it's just simply not the case, nor should you be taking on those obligations. All right. Oh my gosh, I've been talking at you for 35 minutes straight. Tony, other
Yeah,
questions out there?
we do. We got a couple of them, Brian, and thank you very much for it. And then also you said we put that communication out on August 7th. I have put it in the webinar chat. It's accessible to everybody. You can get it there, or it is actually posted on our website, and it's actually going to go out on our signatory platform for those of you who have the signatory app. So, and you can download that on any downloadable platform. Here's some questions though. Does the premium portion need to be paid to them untaxed, or do we still tax it and then the employee takes the deduction at the year end?
Yeah, excellent question. So the deduction that we're talking about, this employee deduction, it doesn't impact your payroll tax withholdings at all. So I'll just use an example. Employee in a work week receives federally required overtime. You're going to continue to tax those or withhold payroll deductions just like you would today or a year ago or 2 years ago. All we're talking about with this deduction is that this law is going to give the employees some ability to claim tax relief for this. So again, short answer, it does not touch or impact your payroll deductions in any way. You're going to continue to take those as you always have.
Okay. Little bit of a question that has come up also, Brian. We do have some contractors, this won't apply to all of them for sure, but who own their companies, but are still belong as a union member themselves and are paying themselves the wages. Would this apply to an owner as long as they're being paid on an hourly scale and overtime?
Yeah, I mean, I'm not aware of the law or the requirements of the law or the availability of the deduction to be based on whether someone's, an owner or not. The real key driver is whether they're paid on an hourly basis and whether they have qualified overtime and whether they have, exceeded this threshold that we talked about with that phase out. But if all of the elements are present to claim the deduction, I would be very surprised if what you just described, Tony, that person would not be able to take advantage of the deduction.
All right. Well, Brian, you did such a great job. That is actually all the questions we have right now. Again, I think I just want to make sure everybody knows Brian and Philibert have been with us for quite a long time. They are accessible to you guys on this issue and other issues. That's part of being part of FCA. So whether it's through Brian or myself or anybody at the FCA office, just reach out and let us know if you have any other questions. Brian, sorry, two of them just came in, so I'm going to throw them at you. On the W-2, will the overtime need to be listed in its entirety or just in the premium portion?
Yeah, so that's again, I'm going off of what I've read and understand. There should not be a fundamental change to what you have to report on the W-2. But what I expect is going to happen is that there's going to be, I'll call it a separate box for you to enter in information that pertains to this qualified overtime. So I think that answers the question. But if not, let me know.
Okay. And could the office people who are salary convert to hourly and somehow take advantage of this?
The short answer is that any decision to move someone from a salaried exempt position to an hourly position, that's a decision that would be made by the company. And just to be clear, so an employee would not have the ability to say, raise their hand and say, I want to be reclassified. So if, for example, the employer agreed to do that, and there are some reasons why I would be really careful about that. Yes, an employee could potentially be converted into an hourly employee and take advantage of the deduction. However, when I say that I would do that very carefully, and I'm going off of kind of general employer principles, you classify certain employees as salaried exempt for a reason. You pay them a salary. You expect them to put in the time and energy and effort to get their job done, no matter how long it takes. If you converted someone from a salaried exempt employee to an hourly employee, it would come with the consequence that you would have to pay them overtime if they put in extra hours, extra time. And so a long way of saying, I would be really reluctant to be moving people into a hourly position just to give them the advantage of this deduction. Again, I'm not minimizing the financial impact, but from an employer perspective, I'd be really cautious about doing that.
So Brian, what I heard is correct, and you'd say you got to look at this from a business decision, but from a legal decision, there's probably no problem with it.
Yeah, you can do it so long as you know you're signing up for an employee that's now responsible for tracking their time and you paying overtime.
Okay. Also, there's been a lot of questions about getting this information. This information is being recorded. It will be put out. We'll put you guys, give you notice, but within 2 days, it'll be put out there if you want to share it. And then the information that's on the slides and that, we'll make sure we get that out to everybody and make sure that's available for everybody. Again, we've done a couple of different things. The letter we attached here for informing your employees. We also, Brian helped us put together an outline of more of the information he shared here today, and plus the PowerPoint, so we'll get that information out. So